ETX has a very clear plan. We continue to grow internationally. There's 5 or 6 other big markets in Europe that we want to penetrate. We need to continue to get more established in Europe. Once we feel that we've gained the market share within Europe that we can do at a cost-effective, within this cost-effective model, we'll look to roll out further. As I said previously, probably looking at Asia, North America, we'll weigh up the two. We're starting that process now. But there's still a long way ETX can go even within Europe before we have to worry about looking further afield. I love the industry. I actually studied to be a farmer, but I love this industry. So I hope I'm around for the next 15 years. I think it's going to be a very different place. I think there is continual regulatory pressure on our industry, and so there should be. We can't have another crisis like we had before, which just means that it's going to be harder to make money, not just for the spread bet CFD industry, but the financial service industry as a whole. I think we will continue to become more efficient. I think we will learn to acquire customers in a different way. I think we'll learn to be more efficient with the revenue we do make from our customers. But I think it'll be a very exciting time. I think it's going to be the competition between players will now happen on a much more global level, whereas before it was just a few UK companies competing and a few US companies and a few Japanese companies competing. I think what you'll find now is we'll all be competing on a much bigger playing field. It definitely, well, on one hand, it becomes easier to set up a new company like this because technology is easy to come by. There's lots of third-party providers. We spoke about MetaTrader. So the economical cost of getting started is much lower than it used to be. But that has been completely taken over by the regulatory costs of getting started. And that is a big question that it remains unanswered. You know, will they soon require at least minimum capital for companies? The minimum capital at the moment is still very low. And what sort of regulatory framework will you have to put in place before you can even get started? I think 10 or 15 years ago, you could get started as a very small one-man band or a small team of entrepreneurs, and you do your best to stick to the rules. Now you absolutely have to stick to the rules. You have to do everything correctly. Otherwise, you run the risk of getting shut down very quickly. Regulatory is definitely at the top of all of our agendas, whether it's spread bet, CFD, FX companies or banks themselves, and for the right reasons. This industry, we're holding customer money, we have to be responsible for that. I think this industry is responsible, and I think being regulated by the FCA ticks some big boxes when you go globally, because we are a well-run operation in the UK, as are most of our competitors. I think the big regulatory changes we're going to see are some competitors coming from less regulated countries using MiFID regulation to come and play in the space. We've seen it from Cypriot firms, and we know that the Cypriot regulators just don't have anywhere near the same level of oversight, and that's causing some concern in our industry. So I think there will become a levelling effect in Europe as regulators all realise they need to regulate at the same level. But I think as a whole, it's going to become more onerous. You're going to have to hold more capital. You're going to have to operate in a tighter environment. And that means that companies like ETX that have scale, are already established, are just going to have that added advantage over some of the smaller players who haven't quite got there yet. Absolutely, it's a natural course. We're an industry that has got to that stage where there's lots of players. Consolidation is absolutely something that will happen. It will happen in our entire industry. And actually, going back to your previous question, as regulation becomes more onerous, that will almost obviously cause more smaller firms to consolidate, to be able to cope with those regulatory hurdles that are going to be thrown in front of them. We are going to have to report all of our trades to a central database. We're going to have to do a whole lot more oversight within our firm. It's going to be costly. There's question marks about whether this has all been structured in the right way, but at the end of the day, it's regulation. You have to do what you're told. So I think this central view of derivative transactions going on in Europe is a very good idea. I'm sure it will change and it will evolve, and I'm sure the eventual output will be better for our industry. For each and individual company that are having to form part of this, it's going to be expensive and costly. No, customers are still in the driving seat in our industry. At the end of the day, as we've seen, spreads continue to compress. What may happen is spreads might not compress for a while, but you know, I mean, I still think it's very cheap for customers to trade this product. So much cheaper than traditional stock trading or commodity trading.